Top of the morning, top of the morning, back at it again with another one. And today we're looking at Bitcoin. As I take a sip of this beveragino, it is the 18th of November, and we have been in the hyperbolic time chamber. If you're a fan of Dragon Ball Z, you know, then you know. I've been in the hyperbolic time chamber ever since, I'd say May. I'd say since May, if I'm not mistaken. And we've picked up on a lot of things that I'm very excited to share or rather document. Um, and it's gonna be cool to see how it serves us in future. It's gonna be super cool. So I'm posting these for me. Really, this is like a journal, a video journal I'm putting together, and I can't wait to rewatch these when I'm like 50 and just see how different life is at that time, or even the trading, or even what I'm capable of doing trading wise. But yeah, first and foremost, I just want to put this chart out here. This is Bitcoin on the weekly. We've filled out an area that we've been eyeing out for a while. So it would be dope to see where this chart looks, what it looks like rather in a few months' time. But I'm just putting that out there. It's the 18th of November. And really, what we're going to look at today is NASDAQ, right? So it's been this is really the first week since the longest US government shutdown in history went down. If you weren't aware, for the past 40 something or so days, the US government has been in shutdown. So we haven't really been getting solid news releases since that data is put together by government bureaus. I'm not really going to go too much into the nitty gritty, but for the past month and a bit, like news drivers such as NFP. You see how we're having NFP now in on a Thursday, and I don't even think it's this month or this previous ones. We're gonna get September, October. Like it's a big mismatch. But anyway, this is the first week since that government shutdown has ended, and obviously there was no news on Monday. I'm gonna go over Monday's trade. Today is Tuesday. There's also no news, but we have FOMC minutes tomorrow. So, as you should know, not rather as you should know. Yes, let me rather say it like that. Yes, Sitch Maddie, as you should know, the day before Big Three News Driver events, we don't really trade. So that would be FOMC or FOMC minutes. The day before, we're not really gonna take anything. Day before CPI, not gonna take anything, and day before NFP, we're not gonna take anything. You know what I'm saying? Yeah. So no trades today. I see it as a good day just to review yesterday's situation. But we got the minutes on Wednesday, NFP on Thursday. That's so weird. Yeah, you see with the tentative, it means it might come up, it might not come up. It's been a very weird few weeks, but anyway. And then cool, we have flash manufacturing PMI on Friday, but yesterday was good. We used a different approach. Moving forward, this is the approaches we have, right? So on days without red news driver events, we're going to make use of macros. So that's looking for positions during macro times. The times we'll be looking at is 8:50 and 9:10 and 9:50 to 10:10. That's on days without news driver events. Obviously, Silver Bullet is in effect, but that's more so compulsory on days with red folder news drivers, where we'll be looking for entries between 10 a.m. to 11 a.m. Eastern Standard Time. So those are the two playbooks that we're really gonna be working with. Those are really the two. But the thinking or setup wise is still looking for internal range entries to external range exits. So continuation patterns or reversals in the right context where we're going external range to internal range. So it might sound like French right now, but trust me, if you just stick along, it's gonna make perfect sense. If you stick along, rather. I'm just posting this for me later on. But if you're trying to sap some of the sauce, then I'm sure you see what's going on this page. But anyway, that's that for economic calendar. Let's quickly go look at the trade from yesterday. I'm going to lay down from the thinking, be that setup, and etc. etc. So I'll start off on the daily, and yeah, yes, where is it at though? Okay, cool. So I had it marked out on Nasdaq. That's really what I was watching. We had a price run, so last week's high to last week's low. That's the price range that I was looking at yesterday. And then, of course, within that price range, we had a fair value gap on the daily. That's that purple block. So the first thing I did yesterday, I mean, of course, after marking out the previous week's high and the previous week's low, as I always start off with, I just pulled out a fib retracement tool. I placed it to the low and to the high of last week's range, right? Just to figure out like that particular PDRA or point of interest, is it in premium that's above the 50% range, or is it in discount that would be below? So if I was bullish, I would really like for price to go to a PDRA that's in the bottom half, or the, you know what I'm saying, 50% that's discount. If I'm looking to sell, I would love it to be above the 50% mark, which is what we had yesterday. We had a price melted, cool, down, down. There was a doji there. Yesterday's daily candle opened up and it went to hit that. And when that happened, I was looking at it like, okay, cool. I'd really anticipate for price to trade towards last week's low. And that was my setup for yesterday on the daily time frame, right? I was looking for a movement of price from an internal range pool of liquidity. That's this fair value gap here to an external range pool of liquidity, which is last week's low. Internal range, external range. Another form of internal range liquidity could be like an order block, like this candle here, which made yesterday's one or this trade even more like solid, if I could say that myself. So that was the setup on Nasdaq. That's what I was looking at. I'm gonna switch to EM to YM because that's really what informed the entry now further. So cool. That's the setup, right? Internal range to external range liquidity. Dope. Done. I went to the hourly time frame. There was a few entries or potential setups that I identified. So I'm just gonna start off with the higher time frame thinking, and then I'll go down or even scale down further to show you all the one I took, the other potential ones, etc., etc. So cool. NQ, here we are. Let me just maximize that one. Yesterday, um, price was around about somewhere here, right? Just ignore that. Price was somewhere around here before all of that volatility picked up because like I said, I looked at the 850 to the 910 macro and then the 910 to the 950 to the 1010 one. But on an hourly time frame, obviously we hit that daily fair value gap. I noticed price took out that low, right? It was still around here. We took out that low, and then we took out that high liquidity sweep, point of interest went down, broke that. Basically, the 2022 ICT model. If you haven't like read up on that or watched that, like check out his YouTube channel or check out mine. I've got cool summaries, but that's the entry method I'm using or that I was looking for. So there was this open fair value gap there. Price later on came up to hit it and then progressed down. But by the time it started retracing back, I was already out. The macro, the entry I took, I already like targeted that pool of liquidity there. So it's just good to note also for future reference, especially on the lower time frame. Just look for the lowest hanging fruit because parent time frame or the higher time frame is parent to the lower one. So I can't expect price to like go against the higher time frame setup on the lower one. You know what I'm saying? Just look out for that. But on the hourly, that was the case. What further gave me confirmation that we're going down? If you look here, I saw a bit of divergence. So if you look on the hourly time frame for US 30 and I put this is just so cool. I really like this thing. I'm lining up my cursor. You see how the cursor lines up on the on this end here, and look at what on the other side there. So if I'm looking at this high here, you see on YM it's a high, on Nasdaq it's a low high, Nasdaq it's sloping up, on YM it's sloping down. That's what we call SMT divergence. So there's a cracking correlation between these two charts. ES, which is US 500, NQ, which is Nasdaq 100, and YM, which is the Jones Industrial Index, or US 30, or US 30, or Wall Street 30, depending on whatever like your broker has it as, right? They are the three major US stock indices. They move in the same direction most of the time. So when you have instances like this, where you see a crack where it's like they're not sloping up or moving in the same direction, it shows you like, okay, cool, let's bamba. So this was like when I saw that and I saw price just like starting to head down, I looked to a lower time frame to look for the quickest entry. Let me go to the M5. Yeah, I just looked for an entry, easy peasy lemon squeezy, and then I was able to handle from there. So I'm gonna delete that higher time frame hourly one since we looked at it. We're gonna look at the one that I took. So the one I took was in between the macro of 850 to 910, but there was another one here that I was just taking a look at. That what started the move, but you could see on the higher time frame we had the direction that we're going much lower. Uh, I just needed a small piece. I just needed a setup that gives me a 1 to 2 risk reward ratio, and we had exactly that. So as I zoom in a lot more here, price was moving down. This was the range that I was operating in. So it's that low to that high. Same range, internal range pool of liquidity. That low was the external range. So there's a nice small scalp on a lower time frame. It hit that PDRA there between the macro of 850 to 910, hit that there. My stop loss was above that area there, you can see there. And it was a calm 32 points risked to make 64 points. Came down, hit it nicely. This was that low hanging fruit, like that other low high. You see there? I mean the low, sorry, you can see there. So we just popped that quickly on the lower 5 minute time frame, informed by a higher time frame direction. So on the hourly, the setup was to the downside. I just found a quick range on a lower 5 minute time frame for a quick in out, and then I was done and dusted. And that was the setup we took yesterday. Very nice. After we took out that low, you can see it pop back up. It hit that hourly fair value gap we had marked out, and then it began to sell off from there quite beautifully though. Took out last week's low or stroked it, and now there's a double bottom there. I anticipate price to come back towards that, but that was essentially the trade yesterday. The main thing was just the logic of seeing how we hit a higher time frame PDRA, that daily fair value gap. We had the SMT on the hourly time frame versus the Dow Jones, and we just eventually scaled to a lower time frame to find an entry and then took it from there. But yeah, man, that's the first trade following the longest US government shutdown that we have ever witnessed in our career. So it was quite cool to see. We went through the most, bro. Like we took very impulsive trades. Like we really gave back like a lot of profits actually. So it was a necessary event. So now we back, we centered again, and we are consistent, or rather, we are now going to consistently implement what we've always had, but we haven't been doing. Um, yeah, I'll be posting some numbers soon from an FTMO challenge that I took out, just for accountability's sake and also track the progress. Um, it's gonna be so cool looking back at this. I'm really going in this with intentionality, but yeah, I'll rather show. I'm not gonna talk too much on it. Um, yeah, just note to self though. I hope you're seeing like all of these technicals. Like I'm sure you're paying attention to like that change of state in delivery that we had marked out, that fair value gap, the logic with the SMT, what we targeted, the fact that this entry was in premium as opposed to in discount, like all of these little things that we've picked up all along the way, all these tools, for like which fair value gaps to pick out and etc relative to the dealing range you're looking at, like how simple that is. It might sound like French right now to like someone new, but like it's so simple. Like we literally at a point now where we don't even watch new ICT videos. Like we've picked up a handful of tools and we implement them fully. So it's kind of cool, I must just say. Let me not go on a further rant, but that's just us right now. It's November the 18th, and yeah, this is the best trading we've been doing ever in our career. So just gonna document. Oh, pardon me. Just gonna document it. If you watch, you watch. Shout out if you made it this far. But yeah, if you know what's on this channel, you understand what's going on. But thank God for another day and new trades on the way. I'm not gonna take any positions today, like I said. It's the day before the FOMC, but I'll just watch to see how the macro performs today. Um, I'll just see what happens. And yeah, just while we're here though, silver bullet on ES yesterday was kind of calm and clear. It gave us a good setup yesterday. I'm just putting it out there for ES. Dealing range was that high to that low there. So that's my sell side liquidity, external range liquidity pool. That's my buy side external range liquidity pool. Um, I was looking at that order, I mean that fair value gap there, order block. There's also, you know, giving extra resistance, but I wasn't really watching it, but I just checked to see during that time, like what setup it would give or if it would give an entry shandies. So entry would have been at around 10:25, 10:30. Trade terminus strictly for 2R would have been around 11:05. So not that bad. Not that bad at all. It's just good to note these things. Would have been a cozy 40-minute trade. 15.50 points risked to make 31 points. Just good to note there. I'm also leaning more towards like just looking at NASDAQ and ES. Just those two charts are enough. I really don't need anything more. But I'll tell you more about it. Like I've really been learning a lot in the hyperbolic time chamber, I must just say. But without getting too ahead of myself, that's the current situation now. Thank God for the skill. And um, for real, if you made it this far into the video, I just want to say, like, take this craft seriously. It can really change a lot, and more so for myself. Let's see what happens if we follow the strategy down to the T. We've spent a lot of time gathering experience to know, okay, it doesn't work here, it works here, it won't work here. Like now it's just a thing of sticking to it, like just be disciplined and consistent, not changing the the risk per position or what instruments we trade. Like, bro, let's be serious about this thing. We risk 0.05% per position per trade, and we just enter strictly based off of the two playbooks we have, which is either the 850 to 910 macro or the 950 to the 1010 macro or the silver bullet model. That's simple, bro. And always keeping in mind setup versus entry. The setup is what I see on the higher time frame. I'm sure if you've seen the previous video, if you haven't seen it, check out Mayday setup versus entry. Very solid video. The setup, looking at your dealing range, that high to that low, that's an internal range pool of liquidity that's in premium relative to this range here. You know what I'm saying? Just that in itself alone, man. Only selling in premium above that 50, only buying in discount below the 50 relative to whatever dealing range you look at. For the entry, in this case, it was a fair value gap. It could have been an order block, whatever your flavor is, or even you could argue this gap there. I'm lying. Anyway, set up entries on the lower time frame. That's really it. Uh, yeah. Thank God for another day. More details or tips from the hyperbolic time chamber to follow. And for real, if you really made it this far, shout out. If you really want to tap in with us for real, check us out on Twitter. Here's the handle. If you really trying to tap in for real, chat with the boy. This is where I'll be at. I'll be posting whatever, you know. So, yeah, thank God for another day.